It is almost noon here in Tokyo. Welcome to Bloomberg Markets Asia. I'm Haidi-Stroud-Watts, and these are your top stories. Asian stocks are catching a tailwind from Wall Street's tech-driven rally ahead of the US inflation report. China, meanwhile, cracks down on short sellers. Also ahead, President Biden's advisors to meet with Senate Democrats as more party voices question his decision to stay in the White House race. The Indian earnings season is set to kick off with the software major TCS, but investors are hoping for strong numbers to justify these high valuations on Indian equities. And we speak to the founder of GMM Musics on the stake sale to Tencent, which valued the unit of Thailand's biggest media conglomerate at $700 million. But first, let's check in on how Asian markets are faring with this support from that Wall Street session. Avril Hong is in Singapore. Avril.
Yeah, Heidi, we're seeing that U.S. rally echoing loud and clear in this part of the world. We saw the S&P 500 on that, another record. It can't stop, won't stop, right? And this part of the world, I think we're seeing the Apple suppliers along with the chip stocks that's lifting the gauges across the region. A couple of themes in there, including Apple saying it'll ship more iPhones. We had Samsung unveiling its new phones. And then, of course, just a day ago, TSMC sales. So this is what you see in stocks. But also keep in mind how Powell saying that inflation doesn't have to hit 2% before we see rate cuts, also providing support for Asian currencies against the backdrop of a softer dollar, keeping a close eye on the won. Today, the PBoC kept things unchanged, and the governor did say that a couple of members are open to rate cuts in the next few months, but they also talked about how the market expectations for easing seems excessive. So the sense you get is that they'll keep things restricted for a while. Korean won actually extending gains. Let's flip the board and take a closer look at stocks in Taiwan. As you see here, the TAIEX is really outperforming what's behind that. We see TSMC going from strength to strength. Yesterday, we saw second quarter numbers, or rather for the month of June, and it showed that the sales growth, fastest pace in 2 years. Keep in mind that this company is the sole supplier for NVIDIA and Apple's advanced chips. What we're looking out for next is its earnings call next week, whether it shows that it can negotiate higher prices. That will be useful for its earnings growth. These are the chip stocks in Taiwan that are lifting the benchmark. We also have Largan, the Apple supplier, doing quite well today. Heidi.
Avril Hong there in Singapore. Let's get some more when it comes to this tech-driven rally. Our reporter Annabelle Jewellers joins us out of Hong Kong. So, Belle, there's a lot of cross currents going on, and some of them are sort of, idiosyncratic stories. But broadly, it is just this rotation between the AI and the Fed narrative that are driving these markets.
Yeah, that's right. And it's really just helping to boost those stocks today. I mean, Avril already kind of went over a lot of the headlines there around this expectations for a cut. You can add to that the TSMC figures that we got out yesterday, the monthly sales numbers telling us that we're likely to see, or we will see, analyst expectations for the entire second quarter being exceeded next week. And as well, that focus on CapEx and what's signaled there. What else is really driving it is just analysts continuing to be more bullish. So, for instance, we've seen Hana Securities upgrading its price target for SK Hynix. We've got that name trading at its highest level going back all the way to 2000. So there's clearly a lot of headlines that you also add on more of the macro focus as well, because, for instance, we had those export numbers coming out this morning for Korea, the first 10 days of the month. And again, it is that stronger number of shipments, outbound shipments that we're seeing, tells us the worst of that semiconductor slump is over, perhaps.
Yeah, some of the enthusiasm over Apple is obviously with the Apple Intelligence features in the iPhone 16 that are, being hinted at. But we're seeing other devices integrating AI, right, as well, including from Samsung.
Yeah, so we had the Samsung Unpacked event overnight, and really, if you were to just take one word that came across, it really was AI. We had it being integrated into new devices that came out. We saw the new foldable phones, the latest iterations, the new watches coming out, a new ring as well. All of this just infused with this artificial intelligence and a lot of really cool different features. Samsung is really trying to face off Apple, particularly in that wearable segment. The ring, that is something that we haven't really seen a lot of true competitors in that space. So something that they'll be really trying to push quite strongly. So that's Samsung. That's the story from them. And then Apple as well, as you mentioned, that was the other one to watch because we had a Bloomberg scoop out saying that essentially they're going to be increasing the number of shipments this year.
And, you know, it comes at a time where it has really not been the best year for Apple, right? Could this be the turnaround?
Yeah, it certainly seems to be the case, actually, because, as you said, yeah, we've had a couple of years of really sluggish sales numbers, quite anemic, really, for Apple, particularly in the Chinese market, where, of course, Apple faces very stiff competition from the homegrown players and has been losing ground there. Samsung, as well, actually, to mention, has only got a very small slice of the sales pie in China. They're also trying to boost their demand there, or sales, particularly with those foldables phones. But Apple, yes, so they had their own worldwide developer conference last month, and in that they introduced this new thing called Apple Intelligence, and they're trying to again integrate AI offerings. They're working with ChatGPT, for instance, to sew this into really all of their different devices. And so now we're getting a sense of what sort of sales we can expect later this year. Apple, what we're hearing from sources is a Bloomberg scoop, but Apple is expecting 90 million iPhone shipments in the latter part of 2024, and that's about a 10% increase on devices. Again, that sluggish sentiment does sort of give a bit of a favourable comparison effect, but still good for Apple all the same. We have seen those supplies mostly moving a bit higher, looking a little bit mixed at this point in time, though.
How concerning in the longer term is the reliance on China, though?
Well, it certainly has been, of course, a bit of a pain point for Apple, and questions over whether it could be able to sustain its edge or its market share in that country. We did have some reporting out a couple of months back saying that Apple was looking to lose a lot of ground in the country. That was sort of debunked in the latest sales numbers that came through, and Apple was saying that they actually were seeing some pretty strong numbers there. It is that sort of geopolitical overhang as well that comes across, particularly for Apple. And you are seeing, for instance, government agencies that are being told that they can no longer use Apple devices. So, yeah, it's always that constant tussle, Apple versus the homegrown players.
Annabelle Jewell is there in Hong Kong, and as Belle mentioned, that geopolitical overhang likely to persist regardless of who is in the White House come following November's election. But certainly this is really one of the top issues for investors in terms of the very candidacy for the Democratic Party. President Biden's re-election campaign is facing mounting opposition now within his own party, a Senate Democrat calling for him to step aside. That's after the former House Speaker, Nancy Pelosi, told MSNBC that Biden needs to decide quickly if he'll stay in the race. Bloomberg's news desk editor Jill Desis joins us now from Singapore. And Jill, it was interesting, the op-ed in the Washington Post from the Vermont senator was really kind of the first explicit call out from within the Democratic camp for the president to step down. Are we still seeing that level of defiance from Biden? And is the pressure just getting to a point where perhaps it's not as easily surmountable?
Yes, Heidi, I think at this point it's a pretty difficult path right now for Biden. He obviously remains incredibly defiant about how he's staying in the race. That really hasn't changed from his perspective. But yes, you are seeing this continued pressure from the Democrats, as you just mentioned there, Peter Welch, the Democratic senator from Vermont, being really the first sitting senator to come out and say that, Biden should step aside. What that actually means in terms of, whether there's any others who come out, we'll have to see. But it does seem at least like there is some of that pressure. You mentioned Nancy Pelosi. I mean, Nancy Pelosi saying essentially that it's up to the president to decide what he wants to do. I mean, she's saying that, but at the same time, Biden has kind of already made his intentions clear. So the fact that you still have these kinds of, nebulous comments from Nancy Pelosi, not exactly, this kind of full-throated support for the president staying on the ticket there, I think all of that kind of combines to show that in the wake of that really disastrous debate performance from Biden, this pressure just doesn't really seem to be going away right now.
Yeah, and Senator Welch's remarks in his op-ed saying we can't unsee that debate performance, right? We're also seeing reports that Majority Leader Chuck Schumer may be open to replacing Biden on the ticket. What are we hearing about that? And I guess the broad question of if he does step down from the race, who could meaningfully replace him, who could actually, perform quite well against the former President Trump?
Yes, well, the Chuck Schumer reports, those are coming out of the news outlet Axios. I mean, he hasn't obviously made those concerns public knowledge, but we'll have to see whether or not that changes over the course of the coming days. In terms of who could actually replace Biden on the ticket, I mean, obviously, the primary choice there is Vice President Kamala Harris. She's already on the ticket. But of course, there are questions about whether or not she's the most viable candidate to actually, potentially beat Donald Trump in the November election. I mean, there were a lot of concerns about, her viability earlier. There's been some recent polls showing maybe she polls a little bit better than Biden. But, in the absence of Kamala Harris actually stepping up and being that nominee, then you kind of open the door for maybe an open convention in August once the Democrats actually meet. And that could pose some additional challenges for the Democrats if they're fielding a brand new candidate, maybe one of the state governors just in a few months before the election.
President Biden's speech to open NATO was largely regarded as very strong and quite compelling, but we're also hearing that some of that lack of confidence is playing out at the NATO summit still.
Yes, we'll have to see how Biden does in another press briefing that's happening Thursday. So he's expected to take perhaps some Q&A from reporters at that press briefing. I mean, at this point, pretty much any public appearance that Biden has is something that has an opportunity to show whether or not he, remains fit for office, at least in the eyes of the public and among a lot of, major Democrats there. So we'll have to see whether that, that upcoming press conference on Thursday actually fulfills that purpose. There's also some reports that you've got, White House aides going to Capitol Hill to try to assuage any fears from the Senate as this, from some of those Senate Democrats, from some of those Democratic lawmakers as this process continues. But yes, certainly massive week for Biden right now with this ongoing NATO summit, with that opportunity to once again speak in front of the public there, to meet with a lot of these European and other North American leaders. And then obviously at the same time, a lot of his staff trying to assuage those concerns among Democrats. It's a really, really big week for the Bidens, to say the least.
We'll be watching that very closely. Jill Desis is a Bloomberg News Desk editor there with the latest out of Singapore. Still ahead on Bloomberg Markets Asia, we'll be speaking with the founder of the Thai entertainment platform GMM Music about their collaboration with Tencent and how the deal could grow the business in China and beyond. That's coming up later this hour. This is Bloomberg. Let's get a look at how Asian stocks are performing on what is broadly a pretty good day as we follow the lead from Wall Street overnight. Tech lifting indices across the region. We're seeing Hong Kong looking pretty robust there, 1.3% higher. Watching for the reaction when it comes to expectations going into the third-party plenum kicking off on Monday, and the CSRC tightening short-selling rules as well. The Kospi, as well as trading here in Tokyo, really being lifted by that big tech rally. TSMC at record levels with the sole supplier of NVIDIA and Apple's most advanced chips, looking at those second quarter sales that grew at the fastest since 2022. Also seeing some gains when it comes to Samsung, despite, of course, that ongoing labour strike situation that is yet to be resolved. And Australia, we are just within a whisker, about 10 points away, I believe, from a fresh record high, harking back to that closing record high previously in late March. So we'll be watching that if we get there on that closing basis today. Our next guest says we may be seeing that sweet spot for Asia equities. Let's discuss all of that with Eddie Loh, who's the CIO of Maybank Group Wealth Management. Eddie, if you take a look at the trading action today, pretty hard to argue with that outlook.
Well, it has been a pretty impressive first half for risk assets. And as we enter second half, we believe the macro landscape remains constructive and favorable for both equities and bonds. Equities will be supported by rising corporate earnings, whereas a peaking rates outlook, I think that will be supportive for bonds carry as well. But having said that, there are actually still risks out there, shifting expectations around inflation and rate cuts, as well as the upcoming US election. So I think that will trigger market volatility from time to time. So our suggestion to investors is really to maintain a well-diversified portfolio with a multi-asset approach to optimize and the investment returns and outcome.
Where do you see the most compelling opportunities within Asia then?
Well, I think within equities itself, we think Asia is in the sweet spot given the fact that valuation is still undemanding. And it is actually supported by not just China, but also other growth markets within the region, such as India, South Korea, Taiwan, because of the tech. Even ASEAN, I think countries like markets like Singapore, Malaysia, I think that's been doing pretty well actually recently. So I think as a whole, we are suggesting investors to adopt a broad Asia exposure in order to have that smooth investment journey, reaping the benefits of diversification with an increased focus on dividend play, just to have that added resilience.
The Bank of Korea was really interesting today, right? Like, they didn't move. That was fully expected, but the signaling seemed a whole lot more compelling for the doves than perhaps we even thought going into it. Do you think at the start of perhaps that easing cycle, as expectations build towards August, is going to change the outlook when it comes to Korean equities, which have gained some of that excitement on the back of the rally in Japan as well?
Right. We believe that, Bank of Korea's standing pair was within expectations, but there are some belief that the Bank of Korea will start thinking about cutting in the fourth quarter. And in general, we are actually seeing similar trend across Asia, where central banks in Asia are watching the Fed very closely before taking rate cut actions. I think partly because of concerns over currency stability. But once the Fed start cutting rates, I think Asian central banks will be in a better position to start easing as well. And that will bode well for their economy and growth. And that will be including the likes of South Korea.
And perhaps, more significantly than for most other central banks, the BOJ, right? How much of a quick pivot or action could we see once we have a bit more certainty from the Fed, from the BOJ?
Well, I think the BOJ caught some investors by surprise by not intervening when dollar yen breached that 160 mark level again. Our suspicion is that the central bank is really trying to reserve their ammo or firepower ahead of the Fed rate cut that is expected to come through sometime this year. So in the meantime, we do expect the Bank of Japan to perhaps hike in July, start tapering their bond purchases. But I think what really matters more for the yen trajectory is the Fed rate cut, because should the Fed really embark on the rate cutting trajectory, that should probably lead to a more sustainable strengthening of the yen against the dollar.
Markets have proven to be pretty good at ignoring geopolitical risk, right? Do you think that's going to be a major catalyst or driver going into the second half?
I think geopolitics, in particular U.S. elections, we are getting quite a fair bit of questions surrounding it. And I believe it will trigger some market volatility, including Asia assets, because if you think about it, should Trump win a second time, he's talking about imposing 60% tariffs on China and 10% tariffs on the rest of the world. That will create some uncertainty on the rest of the markets. But having said that, this time could be different. Trump would maybe, considering or maybe more willing to cut deals or to negotiate with other countries to strike a win-win. So we shall see.
We shall see when it comes to China as well. And I know, in your notes you say all eyes are on the third plenum, which gets underway at the start of next week. But it feels like expectations are just so incredibly low at the moment. Investors don't really hold much confidence in policy measures that might be really meaningfully impactful.
Well, indeed, and partly because if you take a look at the recent macro data, especially with the recently released June CPI data, it came in slightly below expected at 0.2% year on year. So it reflects a soft domestic demand, which is linked to a lack of confidence across consumers as well as businesses. So indeed, more policy support is required for China in order to meet its official GDP target of 5% for 2024. Now, having said that, we have seen somewhat of a reluctance from Chinese policymakers to really launch big bazooka stimulus. So given the fact that you look at valuations today, MSCI China is actually trading below 10 times forward PE. We believe that market expectations for any kind of big stimulus during the plenum, I think, is quite limited, which, in some ways suggests that perhaps there is potential scope for upside surprises, given the fact that very little has been priced in.
Yeah, in fact, one of the options Bloomberg Economics has set out is Fed-style QE, but that's a pretty big call if there are any expectations for China to do that next week. Eddie, really great to have you with us. Eddie Lowe of Maybank Group Wealth Management. Much more ahead. This is Bloomberg. Aros founder Bill Huang has been found guilty of criminal charges stemming from his firm's multi-billion-dollar collapse. Bloomberg's Vonnie Quinn has more from the federal court in Manhattan.
Tiger Cub Bill Huang, founder of Archegos Capital Management, found guilty of a raft of criminal charges in Manhattan today. These pertain to racketeering conspiracy, 2 counts of securities fraud, wire fraud, and several counts of market manipulation in particular stocks such as Viacom, CBS, Discovery, and Tencent. U.S. Attorney Damian Williams in the Southern District of New York said that Huang intentionally lied to Wall Street banks to try and up the trading capacity of the firm in order to intentionally move the prices of stocks in the portfolio higher, and that this doom loop just continued and continued. The defense, for its part, said it couldn't have been a pump and dump scheme because Huang never sold a single share. There was no dump. The defense also saying that the wipeout was due to a black swan event, or indeed a week where there was a perfect storm. Now, that week came March 22nd of 2021. It was a week where Viacom issued more shares, and the SEC said it was cracking down on some China companies listed in the United States. 2 events very detrimental to Archegos' portfolio. Within hours, margin calls started coming in from various banks, and by Friday, Archegos was no more, and collectively, banks across the street were down $10 billion. Sentencing, which in theory could be up to 200 years, at least for Huang, but is obviously likely to be a fraction of that, is set for October 28th. Both Huang and Halligan are likely to appeal. Vonnie Quinn, Bloomberg News.
Take a look at watching when it comes to the CSRC's crackdown on short selling on quant trading in China. These are some of the high short interest stocks that we're watching at the moment. We are seeing some of these pharma companies in particular seeing a rise as we see the securities watchdog tightening the short selling rules to bolster the equity markets. We saw some of the most extreme steps yet to restrict short selling and quant trading strategies. They're really looking to support the nation's sliding stock market ahead of that third plenum. So this is an increase in margin requirements for short selling to take place from July 22nd, essentially making those trades more expensive for hedge funds and other investors. More ahead, this is Bloomberg. All right, let's check in on China markets as I head out to lunch. We'll get over to Avril Hong, who's in Singapore. And Avril, we are seeing this kind of, I guess, maybe a knee-jerk boost to sentiment from the CSRC policies on short selling.
Yeah, absolutely. And we're seeing stocks on the mainland in recovery mode, perhaps unsurprising, as you alluded to there, those tighter restrictions on short selling. So we're seeing among the stocks that are gaining ground, those with outstanding shorts. And also perhaps unsurprising, given how many of the stocks on the CSI 300 were in oversold conditions coming into today. And we are seeing also the CSI 300, as you know, has been trending lower since May. I think it's down about 7%. Let's flip the board, because even as we see this rebound today, keep in mind a couple of market indicators, including how there's this lack of market breadth, right? If you take a look at the number of stocks that are in oversold conditions, it's about the same as way back in February this year, despite the CSI 300 based on levels not as low as the rout in that month at around 3,200 level. So it doesn't look as bad on the face of things, but keep in mind the market breadth or lack thereof. So the board again, because I wanted to bring you some of the data in terms of trading activity for Shanghai and Shenzhen. And if you go back to September 2022, it looks almost as bad as back then. That was when China was in the midst of harsh lockdowns. Investor skepticism was really, really high. And another thing to note was that that came just ahead of the 20th Party Congress. So some parallels ahead of next week going into the third plenum. Heidi.
Thanks, Avril, there in Singapore. And sticking with China, economists are saying that Beijing does have the firepower to end its housing crisis at the upcoming third plenum, but it's unlikely to pull that trigger. Our China correspondent Min Min Lo joins us now from Hong Kong with more. So, Min Min, Bloomberg Economics going through some of these scenarios, and some of them are big bang options, right, of how the PBoC could step in.
Bloomberg Economics colleagues look at three different scenarios of how much money PBoC could print to inject into the market, because the current relending facility injecting 300 billion yuan to help SOEs buy back unsold houses is expected to only mop up less than 1% of the unsold housing. So if the PBoC really pull out the big guns and follow in the footsteps of what the Fed did back in 2008 after the global financial crisis, that would mean injecting about 24 trillion yuan into the market, and that would help mop up 70% of unsold houses. If they do it on a smaller scale, just following on the ECB's footsteps after the European debt crisis, injecting about 13 trillion yuan into the market, that would help mop up nearly 40% of unsold houses. But of course, this quantitative easing of such a large scale would come at tremendous cost. It would mean further devaluation of the yuan, perhaps causing inflation as well, and heavier debt burden for both state-owned enterprises and local governments as well. So what's most likely to happen, our Bloomberg Economics colleagues think, is that third scenario, which is a repeat of what the government did for the Shantytown redevelopment program in 2015, where the PBoC could inject maybe 3.6 trillion yuan into the housing market to mop up about 10% of unsold houses. Now that's projected to create low-cost housing for about 1.6% of the population, and projected to increase GDP growth this year by 0.2% and by 1 percentage point in 2025 and 2026, respectively. Those are some of the measures that could possibly come out, but we don't think the government is going to really pull out the kind of stimulus that markets are expecting.
And we've seen, of course, ahead of that, the securities watchdog tightening those rules on short selling, on quant trading, high-frequency trades to try and crack down what it calls improper arbitrage. We're seeing that boost on the markets at the moment, which obviously plays well going into a big event like the third plenum. But what are the implications of these changes?
Yes, so China has now approved stock exchanges to increase the margin requirement for short selling. So investors now need to put in 100% deposit equivalent to the value of the securities that they are trying to borrow. And private funds participating in stock lending as well have to increase their margin requirement to 120%, up from 100%. And in the meantime, China's largest stock lending provider is going to suspend its stock lending to brokerages starting from July 11. That's likely to give a short-term boost to the stock market. We already see the effects of that this morning after the CSI 300 capped about 7 weeks of losses last Friday. Another area that the CSRC is looking into is quant trading. So they're looking to guide stock markets to impose new monitoring standards and delineate red lines for abnormal trade. And they're also considering charges for additional traffic on high-frequency trade as well. And they will work with their Hong Kong counterpart to find a mechanism for investors to report their trades through that stock northbound stock link as well. So what this will do is reduce the long-short strategies, the scale of those strategies that investors take, and possibly reduce excess returns as well.
A China correspondent in Minlo there. And as we head towards the start of trading in Indian equity markets, Tata Consultancy Services will be one to watch today. Take a look at how they've performed year to date. We've got the earnings due out later on today, and we are expecting another quarter of lackluster numbers. This is, of course, the major tech bellwether, continuing to see clients avoiding discretionary spend, inflationary and cost pressures still being major issues there and hurting companies like Tata. Some of their global peers like Accenture have really struggled with weakening revenues as clients curtail a lot of that tech software service related contract spending. So one to watch in the session, but of course kicking off a big earnings season in India, and investors are hoping for it to be a robust one to justify these high valuations on the country's equities. But strategists say they could be disappointed by lackluster growth. Let's bring our Asia equities reporter CJ Chakraborty, who joins us now from Mumbai. And it would have to be quite a significant outperformance here to be able to justify not just a rally this year, but the 11% recovery that we've seen since that election-related sell-off.
Yeah, absolutely. I mean, the return of Prime Minister Modi did, boost stocks after that sell-off on June 4th, when the outcome was quite surprising compared to what the market was expecting. But now the picture, turns to the earnings season, and clearly at this point of time, strategists are not that confident that the valuations that we have currently can be justified with the sort of earnings growth that they are expecting for the first quarter of the financial year. At this point of time, Citigroup is, forecasting about a 2% year-on-year growth for first quarter Nifty 50 companies. Motilal Oswal is expecting about 4% growth. So that is very low compared to the 11% year-on-year growth that we saw in the last quarter of the previous financial year, which was the March quarter for Indian companies. So at this point of time, it seems like earnings will probably not be able to support the run-up that we have seen in the market, and that could raise questions about the price evaluations that Indian equities have.
Could tech offset some of that pressure?
Well, the one sector that analysts are actually expecting to help is the technology sector. I know that TCS is going to report earnings today, and the expectations are pretty low for the company. But Nomura recently came out with a bullish call on the sector, saying that they expect the first quarter earnings growth or revenue growth to the slowdown that we have been seeing could bottom out in first quarter, and then we can start seeing a recovery in the coming quarters. Motilal Oswal also upgraded the sector from underweight to slight overweight, indicating that they are quite optimistic on that sector. But of course, if you look at the macro picture, the upcoming federal budget now becomes very crucial for the stock bulls, because there is expectation that the government will continue or step up even the spending on infrastructure, as well as support the consumer economy, which came into sharp focus during the election period in April and May.
What are some of the factors that might be able to keep propelling this rally if earnings are slowing, given that we're seeing, both stocks and profit expectations pretty close to record highs?
Yeah, I mean, that is the conundrum right now for investors, right? If you look at 12-month forward profit estimates, they are currently at record highs. Indexes, the Nifty 50 and the Sensex just came off the record highs yesterday, but overall are still perched in uncharted territory. At this point of time, if earnings do not support, then what will? Well, a blockbuster budget could go a long way in helping raise expectations, especially on the earnings side when it comes to 2025 and 2026 projections. But the other factor that has been really been an underlying theme for this market is the liquidity that is available, especially from the domestic investors. We just saw in the month of June equity schemes or equity plans for mutual funds got inflows in excess of 40,000 crores, which is a humongous number when it comes to Indian equities. SIP book or systematic investment plans are trending north of $2 billion a month. So clearly there is a lot of liquidity available, and a lot of investors are parked on the sidelines at this point of time to buy into any sort of dips that this market could see.
Our Asia Equities reporter CJ Chakraborty there in Mumbai with potentially a bit of a warning going into this earnings season. Take a look at how Indian markets just ahead of the trading open. We've had quite a lot of oscillating price action this week. That record high just earlier in the week before a pullback in the previous session. Really a little bit of profit taking perhaps before a significant earnings season. We are seeing quite a bit of upside though going into the start of cash trading. And you know, even with the potential weakness that could come through with earnings, this is a market that remains on course to outperform their Asian peers for a fourth straight year. Let's bring our co-anchor Haslinda Amin now, who joins us out of Singapore, who's about to speak to a special guest. Has.
Well, Heidi, we're talking to the man who runs Thailand's GMM Music. It's behind big Thai artists like Big Slam, Big Ass. I'm not sure I'm supposed to say that on TV. Big Bird Tong Chai. We'll find out why. It sold a 10% stake to Tencent. And what about its IPO plan? Is it on the back burner given the lackluster Thai stock market? We'll get answers from the company in just a moment. Keep it here with us. This is Bloomberg.
You're watching Bloomberg Markets Asia, and Chinese tech giant Tencent recently agreed to acquire a 10% stake in Thailand's GMM Music, valuing the company at $700 million. And it comes after nearly a year after its parent company, GMM Grammy, approved a plan to spin off the firm and list it on the Thai Stock Exchange. Let's get back to Singapore now, where our co-anchor Haslinda Amin is with our next special guest. Has.
That's right, and GMM Grammy, of course, is a dominant player in the entertainment space in Thailand. Let's discuss GMM Music's future plans with founder Famai Damrong Chaitam. Famai, good to have you with us. First off, you sold a 10% stake to Tencent. What's the logic? What's the business sense?
Well, just to give you a context first, and for an underlying global market in terms of music industry, we are growing into what we call a second wave boom. So just to put that into a context, the second wave boom is the market is booming very fast right now globally. And so it's the right time to get into partnership with Tencent. So in terms of the market, globally, we have gone double size in terms of revenue from 2015 right now.
Put a number to it. Double to?
Well, it's been growing in billions right now, and as a projection forward in 6 years, it's gonna double again in 2030, according to Goldman Sachs' landmark study of music in the air. So the market has growing very fast, especially Thailand. Thailand, everybody is saying that the country and the music streaming is taking off in Thailand. So we have been growing around 30% year on year in terms of music subscription. So we have been growing very fast. Altogether in Asia has been growing faster than global market at around 15% growth year on year, and compared to about 10% growth globally.
But presumably, the stake sale to Tencent is to tap the China market. How much potential do you see there? What's the ambition?
Well, we are trying to get a global alliance across different key markets, especially in Asia and beyond Asia to the global market as well. Tencent is obviously one of the biggest market, one of the biggest players in China. China is obviously our target market as well. So we are trying to grow into a bigger market. Aside from China, we have been doing partnerships with other key markets in the in Asia market as well. We have a partnership with YG Entertainment, a label company that manages Blackpink.
Okay.
So K-pop is obviously a very important movement in the music industry. So that's in Korea.
But how much of the China market are you looking at? Would you like to garner 10% of it? What's a realistic target for China?
Well, the thing that in the music industry that has been growing is the music IP asset, right? So the music IP asset is music content, is artists, is concerts. And TME, a subsidiary of Tencent in China, has been very successful in their streaming business. So that's their success in China. And they have been growing into the music business as well. They are doing a lot of live business in concerts. They are doing a lot of artist management as well. So those are the music IP assets that we are trying to collaborate with Tencent and TME in China. And we are trying to grow into China as well. And in exchange, Tencent will have their music regionally grow into China Thailand through us as well.
Are your IPO plans still intact?
Yes, of course. So this investment, strategic investment with Tencent is actually a very important milestone for us to go into IPO as a roadmap.
When?
We're aiming for as soon as possible, depending on the market sentiment, depending on the market environment. So we are very optimistic about very soon, this year to next year. So depending on the market, we are on plan right now.
And what's the amount you're trying to raise?
Well, let's just say we are going to be the only music pure play in the Thai stock market exchange. So we have a unique proposition in the market. And so because of our vision and our plan to grow outside of Thailand into the global market as well, and now that we have Tencent, now that we have other strategic partnerships in the region and outside of Asia as well, we are benchmarking ourselves to the Asian players and the global players in the music industry. So that's going to be our comparable in terms of valuation going into the IPO.
Right now, the company is looking at a possible valuation of $700 million. Is that a fair amount?
That was the investment valuation from Tencent TME.
Correct.
Right. So the investment was the Tencent and TME came in at $70 million for 10% in GMM Music, valuing the company at $700 million. So that was the investment from Tencent and TME. So that is, we hope to be a benchmark for us to grow onto, and together with the investment itself, the strategic partnership that we are trying to build with them, the collaboration that we are trying to build with them is going to make us bigger, hopefully, and it's going to make us grow into a bigger market with them across Asia.
How are you assessing the rate of IPOing in Thailand? The SET has been pretty lackluster. It's down, I think, about 6.5% year to date, when the rest of the world is testing record highs.
Well, the country has been in transformation, but we are still very optimistic about the stock market going forward. For us, the music industry has been growing, as I mentioned before, and for us, we have a unique proposition in the market. So that's why we believe that our position as a music pure play in the market, alongside with our global partners, will make us unique in the market proposition, regardless of the market environment.
Just very quickly, when you see T-pop getting to the level of K-pop, how long do you think that will take?
We hopefully very soon. That's what we are trying to do. That's what we are trying to make alliances of in terms of Asia music market and Asia music players together. And so we are going to different markets in Asia and also beyond Asia. So we are trying to uplift our quality of production. We want to upscale our opportunity outside of Thailand, and of course we want to unlock the value of our company and unlock the value of the music industry in Thailand.
All right, hopefully that will happen within the next 2 to 3 years. Famai, thank you so much for that. Famai Damrong Chaitam of GMM Music. Heidi, handing it back to you.
She'll be listening to more T-pop, I think, as well as the time in there in Singapore. Much more ahead. This is Bloomberg. Indian Prime Minister Narendra Modi's embrace of Vladimir Putin on the eve of President Biden's NATO summit in Washington has frustrated US officials. The Biden administration has made closer ties with India a cornerstone of its foreign policy. For more on this, we're joined by our Bloomberg News reporter Sudhi Ranjan Sen, who joins us. And Sudhi, we were talking, in fact, just yesterday about just the awkward timing going into the NATO summit, and not to mention, the US and its allies' attempts to try and isolate Russia and efforts to prioritize the relationship with India.
Well, yes. I mean, this is what we are also getting to hear from on the ground, that there has been a little bit of a disquiet or a discomfort within the U.S. administration with Prime Minister Modi's visit, and more so the timing of the visit. As we all know, there was a major strike on a children's hospital in Kiev. The optics of the Prime Minister's visit was really, really not well, and people we're left wondering why at this point of time did the Prime Minister want to go to Moscow, because he's not been to Moscow for some time. India, of course, saying that, bilateral agenda had kind of piled up, and Moscow is an old ally of India. Indian military also depends largely on hardware from Russia. But that said, India is trying to be closer to the US, looking out for critical technology, and also emerge as an alternative to China and build the manufacturing base. And that is where the discomfort comes, because questions are being asked or likely to be asked within the US administration about why, when US is trying to help India, India is not doing enough to isolate President Putin and punish him. And from what our reporting shows, my colleagues in the US and me here in New Delhi, what it shows is there have been calls from the US administration and from senior level enough to kind of express concern and also find out why the reason behind the visit. So definitely there is some kind of a discomfort within the US administration at right now over Prime Minister's visit to Moscow.
You talk about the reasons behind the visit, and that's quite interesting, isn't it? Because obviously the US sees its relationship with India as a counter to China. Does India see building this relationship with Russia as its own counter to China?
Yes, I mean, Russia and China has been getting close, and that's really worrisome for India, because India and China, the relationship between the two neighbors in South Asia are not good at all. In fact, thousands of soldiers are still mobilized and deployed along the disputed Himalayan border. India has taken steps to kind of discourage Chinese investments. So the India-China relationship is really, really poor. At that point of time, when China and Russia are getting closer, is a cause of concern for India. And India is also trying to shore up the Russia relationship and not let Russia completely drift into the Chinese embrace. So that is the Indian maneuvering that is there, but it's really not going down well in Washington.
Bloomberg's City Rajan Sen there with the latest when it comes to that geopolitical element as, of course, the NATO anniversary summit gets underway. Take a look at how broadly Asian markets are tracking at the moment. And, of course, this is still the rally that is ultimately being supported by the AI tech space as well as these Fed cut expectations, right? And take a look at the former narrative. Taiwan Semiconductor, one of the biggest that we're watching at the moment, 2.4% higher. We had that 3-month figure of June sales, expecting something of a blowout earnings report next week. We are seeing broadly that APAC Semiconductor Index up about 40% year to date. When it comes to broader indices, futures, that is, we're seeing a little bit of weakness when it comes to US stocks after it has been record high after record high, and just that longest winning streak that we've seen since November. Also watching treasuries going into that CPI report. This is Bloomberg.